Hello, my name is Thomas Hooker and I'm the CEO and founder of Asia Frontier Capital. Over the next few minutes, I would like to give you, together with my colleague Scott Osherhoff, who is based in Tashkent, Uzbekistan, some information about our organization and how we operate. Asia Frontier Capital is a boutique fund management company based in Hong Kong, focused on managing long-only equity strategies in Asian frontier markets, including Bangladesh, Cambodia, Georgia, Iraq, Kazakhstan, Kyrgyzstan, Laos, Maldives, Mongolia, Myanmar, Pakistan, Papua New Guinea, Sri Lanka, Uzbekistan, and Vietnam. I acquired Asia Frontier Capital in June 2013 through a management buyout of the listed equity business from my former employer Leopard Capital. I hold about 75% of AFC and the rest is owned by staff and 3 outside shareholders including Dr. Mark Faber. AFC has currently 9 staffs, 5 based in Hong Kong, 1 in Iraq, 1 in Thailand, 1 in Uzbekistan, which is Scott, and 1 in Vietnam, where we have a research office. AFC is the only fund management company with an exclusive focus on Asian frontier markets, and this since over 8 years. Today, some of the markets are still very difficult to access for non-institutional investors, and thus our strategies are the only way to gain access to these markets, like Uzbekistan. I'm also very proud to report that all 4 of our strategies have outperformed their benchmark indexes. AFC has 4 investment strategies. The Regional Asian Frontier Markets strategy, currently 14 countries, Iraq, Uzbekistan, and Vietnam. Today, I would like to draw your attention to our Uzbekistan strategy. Scott Osherhoff, the Chief Investment Officer, who is based in Tashkent, Uzbekistan, will now talk about our Uzbekistan strategy.
Thank you, Thomas. Good day, everyone. Our strategy is to invest into companies that provide the greatest leverage to the economic growth story unfolding in Uzbekistan as the country transforms into a regional Vietnam of sorts. Uzbekistan is transitioning from a closed and centrally planned economy to a free market economy. As such, we are focused on investing into sectors such as materials, consumer goods, and financial services. We foresee the capital markets in Uzbekistan evolving through 3 distinct stages. Phase 1 began in 2018 and is now just concluding. And this is the period where companies in the broader stock market were largely forgotten and viewed as undesirable by local investors due to a mix of high inflation, term deposit rates in the mid-20% range, and a depreciating Uzbek sum. This made listed equity valuations extremely depressed in multiple cases where dividend yields ultimately were trading at north of 30%, but still accompanied by net profit growth of 400, 500, and 600% as the Uzbek economy was being liberalized. Phase 1 has seen a re-rating of the market, which we regard today as still value-oriented and buttressed by strong profit growth profiles. During this period, inflation has fallen to 10.9%, with the central bank targeting sub 10% inflation by the end of 2022, while currency depreciation has greatly moderated, with 2021 depreciation versus the USD predicted to be approximately 3 or 4%. This compares with 10% in 2020 and 13.9% in 2019. And this has thus attracted local capital to the stock market, which is enhancing liquidity and is something we expect to continue. Phase 2 is the period 2022 to 2025, which will see SOE privatizations, really of the crown jewels of the economy. And these companies will be privatized through SPO and eventually dual listing, likely in London. And these companies include the national airline, Uzbekistan Airways, one of the biggest gold mining companies in the world, Navoi Metallurgical Mining Combinat, and the largest steel plant in Central Asia, Uzmet Combinat, among many others. And these listings should attract significant foreign and local capital to the Tashkent Stock Exchange, thereby increasing liquidity and interest in the market. In Phase 3, we believe we will start to see private sector companies IPO once the stock market is liquid and has enough investor participants, both institutional and retail, to absorb larger share issues. This phase should overlap with Phase 2, and we are already seeing private sector companies considering IPOs in the market. With most all listed companies having varying percentages of state ownership, We are focused on investing into companies which provide the best leverage to the economic growth and which are continuing to undergo corporate transformations. And this includes increase in transparency, operational efficiency, and preparing for ultimate privatization. We have identified a short list of such companies which we regard as the blue chips of Uzbekistan, which new market participants will likely allocate capital to due to their dominant positions in their respective sectors, their high growth rates, and increasingly strong management and financial profiles. As such, these blue chips make up the core of the portfolio. One of these companies is Uzbekistan, Central Asia's largest steel producer, and it's majority state-owned, and it's a company that we regard as one of Uzbekistan's crown jewel companies. UZMK has been undergoing a corporate transformation since 2018 and is planning to double its steel output from 1 million to 2 million tons per year by the mid-2020s, as well as expanding its downstream product offerings. We began buying shares of the company at 10,000 Uzbek Sum per share, while trailing 12-month profits have increased 224%, with the country's demand for steel continuing to rise. The company currently trades at 85,000 Uzbek Sum per share, a PE of roughly 4 times, 1.5 times price to book, and a dividend yield just north of 4%. Uzbekistan is preparing for a secondary offering on the Tashkent Stock Exchange in 2022, which is aimed at attracting new investors. This is expected to be followed by an international dual listing. Kyrgyzstan Cement is the largest cement plant in Uzbekistan, with 3.45 million tons per year of capacity, and is undergoing a capacity expansion of an additional 1.2 million tons. Kyrgyzstan has benefited from a broad construction boom in Uzbekistan. This is really the first sustained construction boom since the collapse of the USSR, along with an existing deficit of cement supply in the country of approximately 3 million tons per year. Kyrgyzstan is expected to be privatized as well and is a strong cash flow generator with minimal debt. Spending time on the ground in Uzbekistan and having traversed most of the country, it is very clear that the demand for cement is still in its infancy in the country. We began accumulating shares in the company at 1,250 Uzbek Sum per share, with it now trading at 6,000 Uzbek Sum per share. The company currently trades at a PE of 4.45 times, 1.5 times book, and offers an 11% dividend yield, while it's trading at an enterprise value per ton of installed capacity at $78. We are very positive that the Uzbek capital markets remain in the early phase of a multi-year uptrend and see minimal downside risk due to high dividend yields, a lack of speculative foreign capital, and very cheap multiples buttressed by strong growth profiles. Looking out over the coming years, the biggest opportunities are in privatizations of SOEs, including companies such as Uzbekistan and Kyrgyzstan Cement.
Thank you very much for your attention. We are looking forward to engaging with you on a one-on-one basis and answer any questions you might have. In the meantime, we wish you all the best. Talk to you soon.